It's not looking good, and you don't need me to tell you that. I think the screen is amplifying that. But let's get the intraday charts, because I think it's worsened. 21257. We're talking about froth getting out of the market. This is serious depiction of that. And if the chart will come up on your screen here on this side, and you will see how we're trading now close to or at the lowest point of the day on fairly high volumes. Must say, truncated week. I said in the morning that it may not look unpleasant and it may not be a formation of a trend. Dead wrong, because we're clearly seeing a selling trend on the banks for sure. This is the Nifty, but the bank Nifty looks equally weak or more so, simply because a lot of banks have taken it on the chin today and ending at the low point of the day, which is not a good sign. We're still an hour away, but doesn't look like that this will have a swift lift off in the session. The broader end of the spectrum will also come up on your screen, and let's just see what's happening there. The mid cap and the small cap end of the market, 3% down for the mid caps. Small cap index too has looked wobbly today, about 2% or 2.5%, so it's not looking that great. Let's get the heat map up on the screen. And if at the start of the day the focus was around Cipla and iBank and how many gainers are there, it's exactly the opposite. Yes, Cipla has done well. Yes, Sun Pharma, Bharti, Hero have done well. And ICICI Bank is holding out, but clearly shows the defensive bent of the market, because look at the losers. A lot of stuff that had gone up is really coming off. More so at the broader end of the market, so Tamanna will highlight that. IndusInd Bank down 6%. There is weakness in ONGC, Coal India. Adani Port got an uptick by S&P, but down today. You know, it's essentially red. Let me quickly get in Tamanna, because we can talk ad nauseum about the number of stocks, but I think what's more important is try and understand what to do in a market like this. And the only thing that I regret is that Z is not a part of the index, because otherwise right there on that screen would have been a 31% downtick on Z Entertainment.
I think those who trade the index would be very happy Z is not on it.
It would have been a great wait, but yeah, it's just really rogered today.
I mean, that's a story that we've been covering in great detail, and of course we got you all through the morning and first, if I may add, inside details of what happened to Z. It's stock of the day simply because of, you know, what other talking point can you think of? 32.5, nearly 33% as we speak. The bottom has fallen out of this stock. It was expected that there would be a huge knock. There's been a big block deal as well, by the way. A little above 2% of equity has changed hands. It was expected there would be a big knock after the deal with Sony was finally called off, and it was clear there was nothing that would happen there. But Z Media, all of the related Dish TV, all of them are doing very, very badly in trade today. But having said that, it's not like the rest of the market is doing very well, except for a few pockets. I'm going to talk about the solar energy play. So there was a tweet from Prime Minister Modi talking about how the vision is to have 1 crore solar rooftops. And this is that one bright spot of green, I would say. Look at Borosil Renew, 8%, Vari Renewable, Gensol, or 5%. This is something, by the way, that Niraj had marked out in trade setup this morning, so I hope you had tuned in for that. Results is the other big overhang on the market. So the clear punishment for poor numbers and reward for good numbers is being seen completely. Oberoi Realty down nearly 10% now. A lot of the Realty pack is also in pain today. So it's not just Oberoi Realty, but Oberoi Realty, one of the worst hits. Their numbers did not look good. Persistent Systems, decent numbers relatively, up about 3.5%. Karur Vaishya also doing well in an otherwise painful market where financials are getting hit the most. And as an example, IDFC First, Spandana, both feeling the heat. IDFC First down 7%, Spandana down 9% because of the cost of funds that is weighing on this microfinance player. J&K Bank had fairly decent results actually, but now is getting turned by the tide, down about 2.5%. So overall, definitely a pain in the market. If I were to say the only spots where there's some resilience is in the healthcare space. So Max Health, Lupin, counters like that, relatively doing decently. But the pain, Niraj, seems to come completely from the financials.
Completely from the financials for sure. And it is the banks which are taking it at the wrong end of the stick. I must say, the other pocket, while we wait for our guests to come in, the other pocket of interest has to be what's happening to the railway stocks in the session today. And, you argue that trees don't grow to the sky, and stocks which have rallied quite severely would probably see some bit of down days. We kind of spoke about it in the morning. Now just look at what's happened to some of these railway plays today. IRCTC down 8.5%. You name a stock, Realty down 12.5%, IRFC down. Every single railway stock is looking wobbly, and there is a reason why. There are two columns that we have for you today. One is the kind of rally that some of these stocks have seen hitherto in the last 1 month. You look at almost any name and the kind of rally that has happened, the 1 month return there, from pure play railway wagon manufacturers like Jupiter Wagons or Titagarh or others, and of course I know that these companies are also doing more, but I'm just classifying them as one bucket, to some of the others, and more so in the PSU bucket, Railtel, etc., all of that. Look at the kind of rallies. RVNL is up 63% until the fall today. IRFC 64% until the fall today. So one, that they've had a really strong up move thus far. Two, the valuations. Now there are various ways to look at the valuations. I've chosen market cap to sales as probably one benchmark which kind of gives an idea. Price to sales, market cap to sales, you can look at it either way and just look at that metric. Now this is the market cap, of course, which is fine, but the market cap to sales ratio is the important one, because that tells you how expensive some of the stocks have looked like. If we can move on from this chart and show you the market cap to sales ratio. So the TTM sales is fine. Can we just have the ratio out there? This is what is important. The market cap to sales ratio. Just look at the numbers even right now. IRFC. It's a financial, so maybe you don't look at this ratio, but I'm using that as an example, 8.5. But look at the others. RITES, 5.5% market cap to sales, 5.5 times. So these stocks are looking very expensive even after the fall. No wonder that there is a bit of a corrective move that is coming in. At some point of time, you've got to pay credence to valuations. Never mind what is how attractive the narrative might be looking like, because stock price returns are a factor of the narrative and of course the valuations that you get in. So I think we're seeing some bit of gravity here today. May or may not last, I don't know, but certainly seeing some bit of gravity here today. Not to say that these stocks are bad or the stories are bad. They're very promising stories, just that the valuations look far overstretched.
You know, just one point I would add there, Niraj, I think a reality check more than anything on what's going to happen in this railway. And I don't know where this report or these rumors came from that your railway capex is going to boost to 3 lakh crore rupees this time from the 2.6 or 2.5 lakh crores, which was last time, which was anyway very huge. And we know in our conversation with Rail Minister that they are looking at 2.4 to 2.6. So where did this 3 lakh crore figure come from? Now that you have brokerage reports and, you know, an indication that your government capex is going to be squeezed this time, there's no money to spend to that extent. So perhaps that's one of the fundamental changes that we're seeing. But let's bring in our analysts today. We'll start with Rahul Sharma, Director and HOR of JM Financial, who's joining us now on the show. Rahul, a very good afternoon to you. Looking like a tough afternoon, to be honest. Your first take about on the Nifty and the Bank Nifty.
Yeah, hi, very good afternoon. So finally, you know, we're seeing the correction, much awaited correction happening in the markets. And this has been, the writing has been on the wall, because, you know, on one side, we had the mid-cap, small-cap indices. Technically, they were as overbought, you know, in long-term time frame, 17-year, 18-year-old high RSIs. Then you had the Nifty 500 index slowly, gradually sort of, you know, bogging down. And now finally, we are seeing, after the big crackdown in Bank Nifty, Nifty also attracting shorts in today's session. Now, clearly, this has been led by the tilt or the tipping point that has happened in the last week, where FIs have gone from net long to net short. And retail, which was primarily short, has now turned positive or long in the index future segment, which is now sort of, you know, fueling this down move. Now, clearly, speaking of what next, so clearly, you know, as at this point in time, after we broke the Thursday's low, this seems like a falling knife, and the psychological support is coming closer on the 21,000 mark for the Nifty. But we feel that this correction could get extended. 20,700 is where we see a meaningful support for the index, around which some bit of a bounce back can be expected. So at this point in time, the view continues to be bearish. and selling opportunity, could be had if there is any bounce back intraday, and primarily led by banking index, which has been the main culprit of bringing the markets down. Now, Bank Nifty is heading quickly towards this 200-day moving average, which is close to the 44,500 mark. So another 400 points can be immediately expected in a correction in the banking index as well. So both the indices remain sell on rise with more downside to go in the next few trading sessions.
So Rahul, clearly waiting for a bounce to go short, not currently necessarily right now, despite the fact that you are bearish, so point well taken, waiting for a bounce. Within this landscape of bearishness, are there individual pockets which look weak enough for you to initiate any trades?
Yeah, so, the best thing to do is relatively look at sectors and setups which have not participated in the previous rally or have fallen less in the current down move. So the top four sectors that come to our mind are: one is IT as a space that looks promising from a 3-month perspective. You could look to accumulate over the next few trading sessions as this correction deepens. Then we have the chemical space, which is not participated. Both these sectors have been underperformers for the last 2 years, and we feel in the next leg these could very well outperform. Third, we have for Make in India, or rather the railway theme, which has been doing extremely well, barring today where we are seeing profit booking. But we feel these breakouts are much bigger in nature. So even if the kind of move that we saw in the last 7 odd days, a pullback of around 20-30% could be a re-entry opportunity in this sector and theme. So these are the areas of the markets where we are selectively bullish on. And in case a bounce back does come, I think banks are the ones to go for. We would prefer with private banking names to go short, especially given that they have been underperformers and Bank Nifty still has more downside to go from current levels. So sell on rise, stock specific, I think private banks are the ones to go for.
Ones, Rahul, would be on your list. You have IDFC first in a lot of pain today. Axis, even though the numbers have not come yet, is seeing that kind of a sell-off. Then you have smaller players that have done badly. Any specific ones on your list?
Yeah, so the most underperforming stock in the private banking space has been Kotak Bank, and it is on the verge of another fresh breakdown, which could happen somewhere around the 1750 mark. So Kotak Bank remains on the top of our selling list in case banks are to be shorted. It has a cluster of resistance around the 1800, 1820 zone. And on the downside, one can easily expect its March 23 lows somewhere around the 1650, 1630 mark, which can be tested in the near future. So Kotak Bank from the large banking names is the one to go for, especially in case there is a bounce back in the banking index. And otherwise too, the structure is pretty weak and one could initiate shorts with the stop loss placed close to around the 1820 mark.
Okay. Gurmeet Chadha of Complete Circle also joining in. Rahul, stay on. Gurmeet, thanks for joining in. The simplest thing to say is there's a much awaited correction which has happened, and it is true as well. The question is, Gurmeet, for people who are looking at the screen right now and nursing the losses, is there more to come? Rahul believes that there is some more pain left. Fundamentally, do you reckon there's more to come?
Niraj, difficult to really have any view in terms of what the market will do in the short term. I think Rahul would have a better sense in terms of the technical analysis. But as you rightly said, it was due. I think there's some bit of confusion also on the FPI norms. Apparently, SEBI is unwilling to extend the first Feb deadline, which they have identified some high risk funds in FPIs, which is amounting to about a little over 2 lakh crores. So that could also be one of the reasons for the sell-off today. If you see actually from the peak, Nifty is almost fallen 500 points. So, and bull market corrections are very sharp. When markets are slightly expensive, they will look for reasons. And so sometimes the reasons are known in hindsight. Also, if you see last, let's say calendar year, mid and small cap has gone up 40-50%. So some of it will come back. So I think maybe in large cap, probably the downside could be limited because we still trade at roughly 19-20 times. And half of the index, which is HDFC, Reliance, IT Pack, a lot of these banks are not really as expensive. So in my view, maybe the index level maybe some downside. But I think small mid caps, you could see a little more correction from these levels.
One stock which is, I would say, defying the trend in a sense is Petronet LNG, one of the gainers of the day. And the reason seems to be a Reuters report, which has said Qatar has signed a long-term deal to supply LNG to Indian companies. Petronet LNG is believed to be one of them, and this at better terms than expected. So this is, of course, part of India's push to move to more natural gas, and we're seeing that coming in. So Qatar set to sign cheaper long-term LNG deal with India, and you're seeing a 5.5% increase in that one stock at least. Gurmeet, at a time like this, is this the time to go stock picking or just to stay on the sidelines as we wait for things to settle? Because there are a large number of events lined up. You have the vote on account / budget, you have the election, and you have a larger positive theme. But right now it seems like a bit of chaos.
No, you've got to be selective. There are, pockets of value. There are pockets of exuberance in the market. I think if you look at, for example, auto, I think if you look at, let's say, M&M in four-wheelers, still trades at about 15 times. They invested in RBL, and since then, I think the stock there's been some concerns again on capital allocation, which they have been trying to address for a few years. The SUV market share is back at 18-19%. I think you will expect more, announcements in the interim budget on rural economy, which could be supportive of farm equipment and tractor. They have more than 40% market share there, and also the LCV is doing pretty okay. So overall, I think it's available, good company, solid governance. I think available cheap. Some of the banking names, it sounds like you've not seen. Most banks are now at 2 book value post this correction. A lot of them trade at 12 to 15 times in private banking space. Some of the PSU banks trades in high single digit earning multiples. So I find a lot of value in banks. Similarly, there is value in terms of the energy basket we track. I think that's a very, very long-term theme we are looking at. So I think there are pockets of value. There's one pocket which I've discussed multiple times now is this religious tourism basket. I think this is going to grow and grow from strength to strength. UP alone probably would have 35-40 crore visitors and devotees this year. So, related names there. So I think it's, any correction is an opportunity to, I would still not call it a correction, it's still not 10%, but any dip is an opportunity to, cherry pick. Broader market, in my view, is a touch expensive. There I agree with the fellow panelists.
Okay, stay on, gentlemen. So much more to talk about. We'll take a quick break, come back with more on the markets, including Zee Entertainment. if it's any respite, maybe the mid-cap index is slightly off the lows of the day, but still 2.8% lower. So it is looking very, very wobbly. What is also looking very wobbly today is Z. Now trading at the lowest point of the day, if I'm not wrong, 30. This is the mid-cap index. Actually, no, still down about 2%. Interesting. Okay, maybe I read it wrong. The stock of the day has to be Z, 32% lower and counting. Obviously, the volume is high. And keep in mind that independent of what brokerages would have said or not said or their target prices, they frankly didn't matter. The writing was on the wall today that this going off would mean problems, and there could be further problems as well if indeed the whole conversation around what's happening with the cricketing rights and the cricketing contract that Disney and Z have with regards to the broadcast of some of the cricketing properties, and if Disney is indeed entering into some bit of agreements with another media house in India, then what happens thereof, because that's the big thing from a revenue perspective as well. So there are issues at Z's thing, and of course the history behind this collapse as well, Tamanna, is not very pretty.
Absolutely, and in fact we got in those exclusive details this morning, which tells you how much Z tried to make it work. And I spoke to sources close to the deal who described it as till our last breath we tried to make it work. But finally it was a matter of egos. That's how sources close to the deal described the whole thing. And it came down to two proposals that Z had put forth, which Sony rejected. First, that Puneet Goenka at least stays on as head of the merged entity only initially till they hunt for a neutral CEO. That was rejected. The second proposal was that Puneet Goenka steps down as Sony wanted, but retains a seat on the board, if not for himself, or at least for a nominee. That was also rejected. So the only viable option from the Sony point of view was Puneet Goenka goes, no board seat, and NP Singh takes over and runs the show. That could be perhaps the very obvious reason, but what's in the books, related party transactions, all of that may have weighed in on the final decision as well. I think the overhang you're also seeing on the stock is because there's a big corporate battle, a legal battle now coming. It's moving from the boardroom to the courtroom, and that's going to be painful as well. Sony wants a $90 million payout from Z as a termination penalty, and that's going to be challenged.
Most certainly, and this brings the question to what could happen to Z going ahead as well. Rahul, I'll come to you first. On a day like this, charts, positions, etc. obviously look weak, but just trying to understand, is there something that you can derive out of the trading pattern today, and what could therefore happen over the next few days or weeks?
Yeah, so the good thing, about markets is they tend to discount the negative news, probably in a session or two. So my sense is we are probably very close to sort of, finding the, at least the short-term bottom in the same. Technically speaking, the last major support that the stock witnessed was in 2021 around the 165 mark, which has been broken. Next is directly coming close to around the 135 zone. So not to scare anybody, but the kind of dent that the stock has seen, one thing is for sure that it will take a lot of time for the recovery and the reversal to take place. My sense is if you are holding on to positions, if it is into cash, might as well wait it out and see some bit of sense develop. But otherwise, for traders, it is strictly advisable to be out of the counter, because the kind of structural damage that we've seen today will probably take a lot of time for it to recover and recoup.
And Gurmeet, before we thank you, any thoughts here at all? It becomes a cheap media asset now, but is it optically cheap, and could it be expensive because of the number of unknowns?
No, I mean, minus any governance issues as they creep up, obviously it's cheap, and it's come back to where it was when the crisis was at its peak before the merger news came in, and that's when it started recovering more towards 275, 300. And I think the merger looked good. Z was good in regional content. Sony was making smart moves in Hindi. Complementary, channel. Sony still has now a problem. I mean, it's not just confined to Z alone. Last year they did 7,000 crore revenue. Now you are dealing with Star, Viacom, which is 25,000. 25,000 crore versus 7,000 crore revenue. Two OTT platforms, Disney Hotstar and Jio Cinemas. So I think it's not going to be easy for Sony as well. And I think there could be a long legal battle also on the claims counterclaim and semi-inquiry. So right now it's more speculative. Um, if there are no governance issues which come off, because there are reports now that the siphoning off is more than the 200, 300 crore, which was originally the claim, then, in these kind of issues, you can't really put a price to it. So best to stay out of it for now.
Okay, well, best to stay out of it is the call. Gurmeet, thanks for giving us those views. We'll let you go on that note. Rahul, stay on. It's just not looking that great at the broader end. We haven't spoken about railways. We haven't spoken about the ones which are doing well too. For example, the solar companies. And I think that bucket is still holding out. So lots to talk about. We need to slip into a very quick break and come back and talk more about what's happening on the markets, more so at the broader end of the spectrum.
All right, it's a tough day for the markets today and a whole host of factors weighing markets down. The bank Nifty, the biggest sort of culprit right now, and you're seeing that way out in the index as well. But overall, the sentiments are weak, even in the broader markets. Nifty Bank now at 2.5% down. I'm quickly going to go across to Agam, who's giving us a picture of what's happening in the F&O space on a day when there's Fin Nifty expiry. Agam.
Well, things certainly aren't looking very good because we started off with a lot of strength and we've just been sliding ever since we saw that positive open in the market. Let's start by taking a look at the Nifty, and quite naturally, banks like HDFC Bank and SBI have weighed on the benchmark. We are looking at a 1.7% cut on the Nifty and unwinding as far as the futures is concerned. Coming down to the Bank Nifty, that's where, once again, the cut will be just by as much, a little over, in fact, down 2.3% as we speak. And as I've mentioned earlier, we've seen that on account of your two large banks, HDFC and SBI, and we are looking at a near 15% increase in open interest towards fresh shorts. Moving on, to talk about how things are panning out as far as your Nifty options space is concerned. This is completely expected. Substantial amount of writing around the call side, not much as far as the put side is concerned because of so much uncertainty. And, to talk about the open interest distribution, well, until morning, we did have a lot of OI around 21,500 put. Naturally, a lot of unwinding coming through, which means that that number must have also come off. Pardon me. And on the other hand, we're starting to see a lot of writing action return to around 21,700, 21,800 from 22,000 earlier. Let's move on and talk about the Fin Nifty itself. And here, no surprises there. Again, a lot of writing around calls, not too much speaking of puts. And it's been a very, very hard expiry for all those who have written puts as far as the Fin Nifty is concerned. Moving on, let's talk about how things are panning as far as the stocks go. So the pharma space has given you a little bit of a green through the course of the day. And of course, Lupin is one of those where we're seeing longs along with Godrej Consumers and Bharti Airtel. On the other hand, weakness in Shriram Finance and Max Financial Services. But longs unwinding in Sun TV, Gujarat Gas, GNFC, and Tata Chem. Metropolis, again, we're seeing about a short covering. But on the whole, today's day has been about the banking index, along with your large cap banks, which continue to lead the fall. And even the marginal gains that we saw from ICICI and Kotak Mahindra Bank really haven't been able to do anything to keep and give and provide support to that banking index today.
Okay, thanks a lot for that. And that's the point. The pain continues for a lot of banks, and including big boy HDFC Bank looked reasonable at 1600, then the results came, extended fall, and now it's down for the fifth day on a trot. My colleague Vishwanath Nair, who's joining in right now with his analysis of what is the reason for the pain, beyond, of course, the obvious ones, which is the results and the wobbliness post that as well. Vishy, not looking good for HDFC Bank at all.
Yeah, so HDFC Bank announced its results last Tuesday, and since then you've seen this consistent sort of reaction within the market. The numbers per se were not so bad, but there were certain areas, certain ratios which did not make a lot of sense to the market. Like, for example, the net interest margin did not make sense, it being flat and there being no close commentary on how it is going to move going ahead. Similarly, on the earnings per share, you saw a year-on-year cut for the first time in a decade. Now, obviously, a lot of that has played out over the last few days. But what we understand is that the negative sort of sentiment on the stock is largely coming from the domestic investors, the domestic clients. So what CLSA has said in a report essentially is that for the foreign investors, the expectation is that the worst seems to be over. You're seeing things improving at HDFC Bank, and of course, in the near term, you will. In the medium term, at least, you will see the benefits of the merger playing out. However, the domestic investors believe that there's an issue here because what the bank is guiding for, about a 15 to 17% loan growth, that, along with a improving margin scenario, is completely an impossible sort of situation. Primarily because to fund that 15 to 17% loan growth, you need deposits about roughly 5 lakh crore. And if you want to raise that amount of deposits, you need to raise deposit rates. And if you raise deposit rates, obviously the margins are not going to look that good. What the domestic investors, what CLSA notes amongst domestic investors is that the ratio of bulls to bears has been higher in terms of the bears outweighing the bulls on the domestic investor front, while on the foreign investor side, you're seeing slightly more bullish commentary coming in. Now, that's what CLSA seems to suggest. We still need to see what exactly the market does with HDFC Bank. However, numbers at this point in time definitely showing a concern for future growth.
Yeah, thanks a lot for that, Vishy. So that's with regards to HDFC Bank. And Dharmesh, Kant joining in, Head of Equity Research at Chola, and Rahul Sharma still with us. May I get the technical view first before, or the derivative view first before I get the fundamental view here? Because HDFC Bank is one key pain point. Rahul, we've spoken about banks at large, but particularly HDFC Bank. And, is a lot of heaviness in the counter might be out of the way in the last 4 or 5 days as well. It continues to see more pain. How do the charts or the derivative positions look?
Yeah, so HDFC Bank has got into this knack of seeing these vertical sell-offs. So we saw one in 2021, another one was in 2022, and now we are witnessing another one happening post the results. The way this correction has taken place, I think 1400 is somewhere a bit of like capitulation can be expected. But looking at the way the kind of derivatives data has been building up in this, it seems like it's going to be a bumpy ride ahead of the monthly expiry that is. So today also we are seeing around 21% addition in open interest, around 371% rise in volume. So clearly, bears are capitalizing on this down move, and at this point in time, some bit of hope can be expected at the 1400 level, and from where some profit booking can be expected in the shorts, where a small bounce back can also take place. So my sense is the pain is not done yet, but a psychological support of 1400 is very much near the mark.
Psychological support of 1400. Let's just, quickly, Rahul, before I come to Dharmesh, get your view on the others in the banking pack. IDFC first. The trigger seems to be the numbers, but down 6.5%. IndusInd, SBI, pain all around. And, if I move to some of the others, it's even a deeper cut. With the exception, of course, of ICICI Bank. Any of these on your list or any views here, Rahul?
Yeah, so from the financials, so something that we like on the short side is Bajaj Finance. Bajaj Finance has actually given a breakdown below its 200-day moving average. Today, the volumes are pretty strong, both in the cash as well as derivative segment. And my sense is the way the setup is, we should head towards a sub 6,800, 6,700 roundabout on the downside. So one can look to short Bajaj Finance at these levels, maybe look at shorting the February futures, which is as we are approaching expiry next week. So February futures, one can look to short with a stop loss of 70 to 50. And we feel that there's a good 300-point slide that can be had in the very short term in this name, especially after the 200-day break that we are seeing, a decisive close below the 200-day moving average that we're witnessing in this financial name.
Dharmesh, views on HDFC Bank and the financial space. Is there a deeper concern here or a bit of panic that you're seeing?
I think there's a bit of a concern as far as, time-bound method of stock price rise is there. Because if you look at BFSI earnings so far, around 2022 companies have reported, the PAC growth has been tremendous. I mean, 32% kind of a YOY growth is there. But if you look at sequential, it's just around 0.36%. And that speaks a lot about the future trajectory, at least for next 2 quarters, how the NIMs and other ratios are going to pan out. Credit growth definitely is going to taper down for Q4 and Q1, around 18-19% from 20-23%. It's going to come down there. At the same time, some tightening on the NIMs front will be there, and some tightening on other provisions which are made maybe because of AIF related and other because of RIL measures which they have taken. So this will keep the profitability in check, and that is why after a stupendous rally on the BFSI stocks, we are seeing some correction happening today. As far as HDFC Bank is concerned, I think it's at least for 1 year or so, the stock is not going to move much, largely because of the type of projections they have given to the brick and mortar expansion of branches. Around 4,500 branches they would be adding, and that will keep a pressure on cost to income ratio. Apart from the fact that CD ratio is already lopsided, for HDFC Bank, and other parameters also falls into place, which is not so conducive for HDFC Bank. So I think for HDFC Bank, it's a long way to go before meaningful price action can take place. As far as selling is concerned, if you have better opportunities in other private sector banking space, for the matter ICICI Bank or a Kotak Bank, so then why you would be holding on HDFC Bank? So some rebalancing out there will keep the liquidity getting out of HDFC Bank, which will keep the stock price correction in the flow which is there. So not positive on HDFC Bank. However, on the banking space, I think it's more of a consolidation which will set in from here for the next 2 quarters. So that is how things are placed.
Okay. Well, that's on HDFC. There are some which are bucking the trend as well, and would want Dharmesh's view on that. So Cipla is one of them. It's rallying on the back of strong Q3. On a day like this, defensives, Sun Pharma, Cipla higher, Cipla at the highest point of the day. Varsha is here with the details of what went right for Cipla. Varsha, good afternoon.
Good afternoon, Niraj. So as you rightly said, so if you see supply is up over 7% as of now. And let's see how the numbers were. So the Q3 FY24 numbers actually were in line with estimates, where third quarter profit increased 32% year on year. And if you see, One India business grew at a healthy rate of 12%, which was backed by strong performance across branded prescription, trade generics and consumer health. Also, the US business grew almost 18% in absolute terms to 1,916 crore, and growth was supported by volume traction in key assets. Then, of course, on the Actor Pharma acquisition, the CCI approval has been received, with integration expected to be completed in Q4 FY24. Also, if you see, business in other international markets and emerging markets in Europe fell 2%, while there are few brokerage notes on Cipla, wherein Citi has maintained buy with target price of 1,380. Now, according to Citi, pipeline continues to improve with filings of few of assets in US, while BofA Securities has reiterated underperform with target price of 1,150. Now, according to a brokerage firm, fourth quarter margins are typically lower due to higher OPEX, which could limit possibility of earnings upgrades. And lastly, there has been news that Cipla has incorporated a subsidiary company for distribution of pharmaceutical drugs in Mexico.
Varsha, thanks for that. Dharmesh, interesting reactions to these kind of numbers. What did you make of Cipla?
I mean, the numbers were great, but my only point is whether the consistency of these numbers going ahead. So I doubt that would be the case. So this quarter has been exceptionally good for Cipla, and some moderation is expected in next 2 quarters. However, in the pharma space, I think the stock which stands out given the price run-up scenarios, Dr. Reddy's looks to be a very good bet. I mean, a problem with the Russia shipments is not there. They have been shipping well to Russia. Even the Ukraine part has been resolved. That was what the management said. I do think, given the context, the type of valuation Dr. Reddy's is sitting on is pretty much cheaper compared to a Cipla, Sun Pharma or Window Pharma. So if one wants to get into a defensive with a better valuation bet on play, Dr. Reddy's is a better buy at current juncture. However, if one is holding, say, a Window Pharma, Sun Pharma or a Cipla, they may continue to do so, because my expectation for market for next 2 quarters on the index level is not that great. It's more of a sideways consolidation where these companies do find a good buying merit and attraction out there. So that is how it is playing out as of now.
Yeah. Rahul, any take on the pharma space? Relatively doing fine. Lupin today, decent. Granules. Some of these counters, Max Health, I would mark out, are still doing relatively okay. Anything that you like over here?
Yeah, so Pharma as a defensive name has done well today. Also, it is backed by the fantastic numbers reported by Cipla. And I think as long as the broader market remains a bit, negative, Pharma is expected to do well. Now, looking at in the Pharma index, it is on the verge of a breakout. In fact, the breakout could take the index higher by around 2 to 3% in the very short term, which translates into a good upside for the stocks. Now, what do we like in the pharma space? Oro Pharma is one setup which is looking pretty decent. I think there is a good chance for the stock to head towards 1,200 on the upside. So one can look to buy around this range. maybe around 11:20, 11:30, 10 rupee range, one can look to buy. Stop loss place at 1,060. And Pharma is expected to do well, led by these large cap names. So overall, not only the large cap, but the smaller Pharma names are also expected to be positive from here.
Okay, so that's on Pharma, which is bucking the trend. The two other pockets of interest are, of course, on the downside, railways, and on the upside, some of these stocks that could potentially benefit out of rooftop solar. So, for example, look at the intraday of Adani Green. It corrected. It started off well, corrected, but on a day like this, it's back in the green. Look at Vari Renewables. The stock is up on 5% upper circuit and stayed that way for a better part of the trading day today. Look at what's happened maybe to Tata Power, and maybe that stock too could be positive. I haven't checked Tata Power in the last few minutes, but it could be interesting to see what the Tata Power intraday is looking like. Flat, not really sulking. So that is one pocket that is standing out. Dharmesh, it's a big opportunity. Would you go out and buy into any of these names by virtue of what's been announced or will be announced, which is the scheme for 1 crore households to have rooftop solar modules over the course of the next few years? Is that a big enough incentive?
Yeah, definitely. And the best part about this government is these announcements do materialize and the execution does take place. So having said that, I think the entire segment is quite fragmented. It's more of an unorganized segment, which is there as of now. Rooftop solars are there in many of the buildings, but they are from the smaller players. So that will get integrated into a larger place as things roll by. And post this announcement, I think people will take this opportunity more seriously. And going forward, it will be more than 1 crore households. It can be 2, 3, 5 crores. It can go like that. But having said that, right now, I mean, our research team is in a work in progress. We are trying to identify those companies which are thematic plays for this opportunity, and it's at least has to be a 3 to 5 year kind of a call, because right now if you look at valuations, I mean all the stocks which are remotely related or related to this kind of an opportunity are already up. Only Tata Power is the company which is not showing traction, but I am very sure Tata Power will take this opportunity in a bigger way, and so will be the case with other major power players. So 15-10 days, let the stock price settle, but this is a theme to be played out, or maybe a basket buy at current levels if some aggressive investor is there. So yeah, definitely. Valuing right now is a difficult. So let's a report come through, then I can discuss in detail with you.
Right. Absolutely. Just a few minutes to go before we close out what is looking like a difficult day. Recovery here in Adani Green that you're seeing on your screens, but the Nifty seeing quite a bit of pain. What would you do on a market like today is the question, and I just want to pull up some of the Realty counters which have been seeing quite a hit. We were talking about overall Realty in the context of its numbers, but look at Prestige. That's also seeing quite a bit of pain today. That stock about 10% down, still recovered from the low of its days. And these are some of the counters. What is the kind of theme that you're seeing over here, Dharmesh? Is this more of a correction of, stocks that had run up massively and had a one-sided kind of a growth? You've seen that in your RIL pack today. You're seeing that in Realty as well. Is that what you'd put it down to?
Yeah, definitely. I mean, that is what we are seeing as far as overall Realty is concerned. Numbers did miss the estimates and what the analyst community was expecting. But I think going forward, the low-hanging fruit for most of the Realty companies are through. So now whatever opportunities they are setting on, their cost is going to go up, because those are now new lands parcels which they have acquired. For example, in the case of Realty, the Delhi NCR land which they have acquired is a much higher price than the 20 years or 15 years bank kind of a land parcel on which they were sitting on. So that will hit on the margins front. But I don't think the real estate opportunity is gone. I mean, the best is over. That is not there the case. The real estate opportunity is here to stay for next 2-3 years, and we are on the top of the interest cycle. As the interest rate comes down, affordable and mid-segment will also gain further traction. I think it will more become a volume game with a packed growth. This fall which is there today, and maybe if the market corrects further, some more fall happens, so that is the time to get into real estate stocks. And you should have a horizon of at least 2 years for dabbling into these companies at current levels. So that is where the valuations will seem. again, a bit on a cheaper side after 2 years hence, and there will be a stock price traction.
Yeah, yeah. So anything you like in this pack, Dharmesh, even with a 2-year horizon?
Yeah, definitely. I mean, Phoenix Mill is one company which we like, DLF is another one, and Oberoi Realty is also there in the pack. So these three companies we do like. Though on today's fall, we have not recommended our clients to add on to Oberoi Realty, but definitely if there is some more fall coming into the play, we would be adding into these companies at say maybe 5% more down the line.
Okay. Well, so that is real estate. The other one today that has gotten clobbered, Dharmesh, is railways, maybe with reason. We just did a small dipstick of the kind of valuations that some of the stocks are trading at, and egregious in certain cases. But here's the question: the opportunity size is large. Would you use this correction to buy into them? And would tomorrow be a good idea, or would you believe there should be more correction into some of these?
See, nothing wrong with the business. Opportunity size is definitely very large, and as per the promise of the government, this size is going to get bigger. But the point here is a company has a limited execution capability, so that cannot be changed overnight. And these are construction plays, the railway stocks, for example, RVNL. So laying of railway tracks and the bridges and railway station, that takes time. So it has, I mean, 15-17% CAGR is the best they can do. With the kind of infra spends or the entire infrastructure on which they are sitting on. So keeping that in perspective, the run-up was humongous. So this correction was about to come. It has come today. So unfortunate for the people who entered today morning or yesterday. But again, now it has become a very long haul. I mean, if you come to justify the valuations, it's now based on FY27 kind of earnings rather than FY26, which it was earlier the case. The only mistake, Niraj, what I think people do is when they are looking at these companies, they look at 5-year or 10-year mean multiples. So that is not the case with these companies. That scenario was totally different. The scenario in which we are sitting as of now is a totally different. We are sitting on a compounding of a growth story in the railway stock. So from that perspective, I mean 10-15% more correction from here, for example, in RVNL or ILCOR, they will again become attractive from a longer perspective, not just for the budget trading perspective.
Some of the bright spots today include Petronet LNG. We spoke about it. Expected, deal with Qatar, long-term deal with Qatar. Persistent Systems is another one. Though tech stocks have not done as badly, relatively, Persistence actually doing well, about 4% up on the back of numbers. Now, we spoke to the management on the company's margin outlook and margin levers that they plan to achieve. Listen in.
So if we look at the quarter gone by, we expanded the margins by 80 basis points. This was on the back of higher utilization, lower travel expenses, and more of SG&A and other rationalization, the cost containment that we do on an ongoing basis. So this quarter benefited from these things. As we go ahead, we have very clearly said over the next several years, we want to expand our margins by 200 to 300 basis points. And that is based on optimizing our overall operations, right from our SG&A, which is roughly about 50 basis points higher. If we compare the 9 months of this year versus 9 months of last year, the utilization, where we are at 81.5%, we intend taking it up 2 to 300 basis points. And then, obviously, we've hired a significant amount of leadership and built capabilities that should give us leverage over the next several years. So you should see margin improvement over the next several years, eventually as we go ahead.
All right, so that was the Persistent management with a positive commentary there. Dharmesh, views on Persistent and Coforge. Coforge, though not responding too well to its numbers. You're seeing a market which is very quick to punish numbers that don't match commentary or expectations, and quick to reward on the other end of it as well. In the mid-cap IT space, what do you like, and any views on these two counters?
See, Tamara, if you look at mid-cap IT space, the companies which are into ER&D segment, they have delivered a good set of numbers rather than pure software as a services kind of a play. So there, I think Persistent delivered a decent set of numbers. And the other stock which I'm looking forward to, the numbers I think is to be announced tomorrow, is Silent DLM. So these two companies does look attractive to me. Other than that, Newgen Software also delivered a quite good set of numbers, and the commentary was also encouraging. But To my mind, one has to be very careful while selecting, mid-cap IT companies. And the focus has to be on ER&D and their persistent system or DLM or LTTAs. So these are the three companies which after the assessment looks very attractive to me.
Dharmesh, we'll leave it at that. Thanks so much for taking the time out and being with us and giving us your thoughts. Really appreciate your time. It's time to wrap up the markets and not a great close. Will come up on your screen, the Nifty. Still sulking 1.5% lower, so no big changes there. And the intraday of the Nifty will show you the Bank Nifty to 2.23,000 points. The intraday of the Nifty and the Bank Nifty will show you that they've ended at the lows of the day. The small cap 50 most since December 20th, 2023. So not great for the mid caps or the small caps either. And look at that chart, just hovering around the lowest point of the day for almost all the key indices. The heat map will show you that Cipla and ICICI Bank are probably up there. Maybe a Sun Pharma might be up there. Bharti is up there. But that's about it. A defensive bent, if you will, to the market. But look at the losses that have come in. 6.5% for IndusInd. The picture pretty much looks the same. SBI Life is probably fallen a bit more, 5% lower. But the main story is at the broader end of the spectrum. We know that this picture is bad. Look at what's happening to Z if you want to see what's happened worse. Z has corrected and stayed lower for a better part of the trading day today. It's just looked very, very wobbly. The market is shut, but just pull up Z and pull up a few other stocks before we wrap up. 30% lower, 70 rupees gone, 160 is where Z is trading at. It was at 280 less than a month ago. Just the kind of pain that today's fall and the fall of last week. If you look at the last 5-day chart of Z, it'll show you it's probably trading at about, before last week at about 270, 280, and then has just had a really, really bad move. This is, well, this week about 24 odd % for Z as well. What else? There is the real estate plays, renewable plays, all of which have looked wobbly. The railway plays will have looked wobbly. So real estate, Prestige Estates, Oberoi. Okay, let's start with railways. So RVNL down 10%, Railtel 12%. Pull up any other name on the railway side. IRFC 8%. I think Titagarh and Texmaco too have looked wobbly. IRCTC is down 8%. So that's one bucket that has looked very bad. And then if you look at what's happened to the real estate plays, there is Prestige Estates, there is Oberoi Realty, almost any other stock out there in that bucket too has looked very, very wobbly. What has looked okay, I must say, are these renewable names. Adani Green, Vari Renewables, Tata Power, some pretty stable trading in the session today, and that is something that looks okay. It's in the red, but not fallen as much. Vari is Tata Power, again flat on a day like this. Vari Renewables up. Borosil is up about 10%. So that end of the bucket has looked reasonably okay and has stayed okay on a very bad day. So that's the key point. The volumes high today. Would be interesting to dissect what's happened on the derivative side. So you can expect some bit of that in the session tomorrow from us. But that's it on the market wrap on India Market Close. Thanks so much for watching. Of course, we are in the run-up to the budget talking to a bunch of people on what is it that they expect. Here are Niranjan Hiranandani on the budget expectations.
We've talked about what needs to be done in giving the benefit in terms of like ATIB, tax-free nature for the small segment. Rental housing is what we are talking about. Input tax credit for the purposes of commercial buildings. A lot more that